Okay, everybody, I'm going to just go over our 8 strategies to win offers when we have multiple buyers. We're also going to talk about expectations. So, first thing is we have the 8 strategies. Increase your offer price using a no cap escalation to outbid your competitors and not overshooting your bid. We're going to possibly waive the home inspection and purchase a 1-year home warranty. We want to obtain strong financing. Increase your earnest money deposit, try to have a fast settlement date, flexible options to the sellers in terms of the offer, including what might be a rent back, so that it allows the sellers to take extra time to move out or for other reasons, pay the seller's transfer taxes, and finally waive the appraisal or offer a small bonus above the appraised value, but not exceeding your contract offer price. So the first strategy, increase our offer price using a no cap escalation. What we're talking about here is that when we have multiple offers, we all like to know possibly what the highest offer is, because obviously we probably hate to lose by a couple $100 or maybe even a couple $1,000. You might have said, God, I would have paid more for that. But in this industry, agents cannot disclose to us what those other offers are, because if they did, it would be unfair. And if they did it with us, they would have to do it for everybody else. However, if we submit the offer with a escalation clause, that gives us the right, because if they're going to counter us, they would have to disclose who is the highest price, to then let you decide if you want to beat that. The reason why I use the term no cap is because most escalation clauses have a cap, meaning that your agent would tell you, well, I want to pay 500,000, but I'm willing to go 530. Well, by showing the sellers that you're willing to go 530, they may just come back and counter you at 530, even if they have or do not have an offer that is high, because basically you're showing them your cards. So what I do is I use what is called a no cap escalation, and I don't put any amount. This way, they have no idea how high you're willing to go. You may be willing to go $1,000 higher than the highest offer. You may be willing to go 50,000 higher than what you originally stated. But the seller doesn't know, and you are not obligated. So even if they come back and counter you and say, okay, the highest offer is 550 and you offered 500, and they said, okay, you want to go 551 and it's yours, you make the decision if you want to accept it. So having this knowledge and power is going to give you the ability to possibly get the home that you want without overshooting your bid. Second, waiving the home inspection and purchasing a home warranty instead. In relatively newer homes or homes that have been updated in certain areas and you want to try to win the offer, waiving the home inspection takes the stress out of the seller from having one. And if they're already living there and everything is working, chances are the home inspector is not going to find anything wrong with the house from a structural or operating situation. If anything, it's going to be mostly cosmetic. And those things we don't typically ask to be fixed anyway, because they're just simply cosmetic. The other thing is that, something could be working at the time of the home inspection, but then after you buy it, several months later, something could break. So it's a one-time inspection in a snapshot period of time. With the home warranty, it covers all the appliances, electrical, plumbing, roof leaks, etc. And the way it works is that when something breaks, you simply call the home warranty company, you pay a small service fee, and they come out and fix it. If they cannot fix it, you get that item replaced. I have replaced a cooktop because it had a gas leak and the flame shot up. And we called the home warranty company. They sent a plumber out, said, don't touch it. And since my cooktop was 15 years old, they didn't have one that I originally bought. So they gave me the newest one and we went from there. For some of my rental properties, I've actually gotten HVACs replaced, but that doesn't happen too often because normally they're able to fix it. But again, this is just another way of presenting your offer and making it better, because you're taking stress off the seller, and other buyers might be doing the same thing. The third is strong financing. You always want to put your best foot forward. Although you may qualify for the best loan and you do not want to use the best loan, like maybe you have a VA or you have an FHA that you could use, I will always show if you can qualify for the conventional loans, um, or there's even something even stronger than a conventional loan, but we won't get that into that here. But you always want to put your best foot forward, because sellers will look for, when there are offers that are equivalent in terms and price, they'll look at the person that has the stronger financing, because the stronger financing just means that there's going to be less chances of something going wrong during the underwriting process. Now, cash is always best, but obviously you don't want to liquidate all that. However, if you do have the cash, what you could do is make the cash offer, pay it in cash, and then once you have the home, then apply for a home equity line of credit, so that when you want money and you need it, you still have that money back, and you can get a home equity line of credit up to 90% of the value of the home. So um, if you bought a $500,000 townhouse and you paid for it in cash, and that emptied out your entire savings account, no fear, you can go out and get a home equity line of credit for $450,000 and have access to that $450,000 for the next 30 years at any time, with a checkbook, with a debit card, no problem. Increase your earnest money deposit. The earnest money deposit is simply the amount of money that you're going to put a deposit when you make the offer. So if you happen to win, that money is actually deposited into escrow with the title company. That amount is typically 1% of the purchase price. So if you're buying a $500,000 home, they expect typically a $5,000 deposit. I would increase it if this is something you really want, like maybe 10 or 15,000. It's not like you're spending any more. All it means is that you're showing that you have financial strength and that you really want the home. And that money, your deposit, will count towards your down payment or closing costs. So unless you're going to break the contract illegally, your deposit will be returned to you if something fails. Like if you're doing an inspection and it fails the home inspection, you can back out. If your financing falls through for whatever reason, lost a job, or something showed up that the lender didn't catch, the lender just writes a decline letter and you get your deposit back. If the house appraises for less than your offer price, you have the ability to renegotiate. And if you can't come to terms, you get your money back. The other loophole is that if the house has an HOA or condo association, the sellers are required to provide you with the HOA condo association packet. And it's a packet of documents that you look through. Most of us don't really read it in detail, but under Maryland state law, you have 5 to 7 days to review those documents. And for any reason, you can back out of the contract. So if, let's say, you went under contract on October 1st, and you got the condo and you were settling, let's say, on October 31st, and you received the HOA documents on the 15th, you would have 5 days from the 15th to back out. With a condo, you have 7 days to review the documents. So if you got the documents on the 15th, you have until the 22nd. If they give you the documents a day before settlement, which that rarely happens, but let's say they forgot and they gave it to you, you would be able to back out the night before settlement if you really wanted to. Not that you would, but again, those are the loopholes. Fast settlement date. Choosing a fast settlement date also shows financial strength and shows that you have a very good lender that can process this as soon as possible. There are lenders that can do it in 14 to 18 days. And then there are some that take 30 days or 45 days, depending. But if you have a good lender and you have all your documents and all your ducks in a row, you should be able to close easily in under 30 days. So putting a fast settlement date on the contract is another attractive term. Flexible terms like a rent back. Sometimes sellers might need the funds from the sale of the house to buy their next home, or sometimes they might need time to move for whatever reason that they want to stay in the home after settlement. If you're willing to accommodate and say, okay, after settlement date, they can stay there X amount of days or X amount of weeks or even months, that is very favorable, especially when the seller is in a bind. So if, let's say that the seller says, I need to stay there, after the 30 days when we settle, I would like to stay there 1 week extra. In a typical scenario, you are now the landlord and your seller is the tenant, because now you own the house and you're renting it out to him for 7 days. In a normal, typical scenario, they would pay 7 days worth of your mortgage payment. as rent. Now, if you want to provide favorable terms, you might let them stay in there for free because it doesn't really cost you any money. Your mortgage payment does not begin until the following month. So if you're able to do that and you want to try to beat somebody else who's also willing to do a rent back, offer a free rent back. I've done it many times for my sellers who got into situations where they needed to stay in there for an extra month, and even up to 6 months. I got my clients free rent for 6 months. Again, it's one of these situations where if you really want the home and you want to, accommodate, you can do that through a rent back. Offer to pay the seller's transfer taxes. This one is often overlooked because normally it's about paying more for the house. But if you want to stand out a little bit more and, not only just give a increase in the price, but if you want to offer pay their transfer taxes, then you can. And it's usually anywhere between 1 to 1.5% of the purchase price. Waiving the appraisal or offering a bonus. So what this means is that if you are buying a home with a loan, the lender has to do an appraisal on the house. If, let's say, the appraised value comes in lower than your contract price, then we have to renegotiate typically because the seller has to lower the price to what your lender says. However, if you waive the appraisal right, then what you are saying is that regardless what the bank says, you have the cash to make up the difference and willing to pay it. The reason why this is so favorable is because the sellers know exactly what they're getting. If you're going to offer $500,000 on a $450,000 listing, they know you're going to give them $500,000 no matter what your bank says. Now, if let's say you cannot guarantee that amount of money, you might be able to guarantee a smaller amount, which is an amount above the appraised value. So let's say that you offered $500,000 on a $450,000 listing because you wanted it really bad, but you can't cover if, let's say, it appraises for $400,000. You don't have $100,000. You could say, I will pay $5,000 or $15,000, whatever number you want, over whatever the bank says it's worth. And this way, what happens is if it appraises at 400, you pay 405 if you're offering 5,000. If it comes in at 430, you pay 435. Now, if it comes in at your contract price, you don't pay the bonus because it appraised correctly, and you just pay the contract price. On a final note, it's very important to manage your expectations when you're making an offer. And what I do is I always ask my clients, how do you rate this house on a scale of 1 to 10? Because here's the thing. What you might think is a 7 may be a 10 to somebody else. And they may offer a ridiculous price for a personal reason that may not make any financial sense. I'll give you an example. I had a client that absolutely loved this townhouse. She had to have it. She was willing to pay 10% more, which came out to $50,000 more, and she still lost. She lost to somebody because somebody offered $25,000 more, $75,000 over the list price. And, that's crazy. Some of us might think it's stupid. But the reason that that buyer did that was because their mother lived down the street and they wanted to be close to their parents. So it had nothing to do with the financial reason. It was strictly personal, and people would do what they need to do out of convenience or any type of reason outside that would otherwise not make financial sense. So here we go. If, let's say, you rank this house below a 7, I wouldn't even bother making the offer. You don't want to settle. If it is a 7, I'd probably just offer list price, because if you win, great. If you don't, you move on to the next one. If it's an 8, I would offer anywhere between 1 to 5% over list price and use one or all of the 8 strategies that I've gone over. If it's a 9, I would offer 5 to 10% over list. This is almost like a nearly perfect house. And then again, use one or all of the 8 strategies we discussed. And if it's a 10, well, sky's the limit, meaning that you do what you want. It makes no financial sense. It's just that you have to have this house no matter what. And if you have the means to do it, you don't hold anything back. You give it your best. So I hope that this helps you in making better offers. This is exactly what I do. I deal with so many buyers because I am a premier 5-star Zillow agent. I spend a lot of money on advertising, so I deal with a lot of buyers all the time. And I walk them through this just so that they have a clear understanding of not only how the process works, but what other people might be thinking when you're competing. And, sometimes you're not going to win every offer. And it's very important to have patience and to treat buying a house as like a marathon, not so much a race. Don't go out every single weekend, and get all excited about a house. And then if you lose, you get depressed and you repeat that cycle over and over. It's not positive. Um, there's always going to be another house, and you know what? It's probably going to be better anyway. Because that's what usually happens. I just tell my clients, pace yourself. It's like, jogging. You see a house you like, you go through it, you rate it. Yeah, it's a 7 or 8 or 9 or 10, whatever. You make your offer, you win, great, you got it. If you don't, keep jogging and move on to the next one. Move on to the next one. Like I said, don't get overly anxious, don't rush, and don't get disappointed. I hope this video was helpful to you. And if you need anything further, please do not hesitate to text or call me anytime. Thank you.